Hello and welcome back to the Credit Academy. My name is Michael, and on today's episode, I want to dive a little bit more into what exactly FICO is. Now, I did briefly talk about this in both Vantage scoring models in the last episode, but on today's episode, I want to solely focus on FICO and kind of why it's one of the most important models and things you should know about when it comes to you and your own credit scores. So let's begin things off with a little history on FICO itself. Now, FICO, the company, was founded in the year of 1956 by Bill Fair, who's an engineer, and then he also had a partner named Earl Isaac, a mathematician. It was then in the year of 1989 that the FICO score was then introduced. Now, its purpose was to kind of replace hunches with calculations when it came to lending people a bunch of money. Then in the year of 1989, the FICO score was introduced. And really the whole goal of this was to replace the then, at the time, popular kind of hunch theory when it came to, lenders kind of appropriating the, level of risk when it came to potential, consumers with more calculated risked options. So in reality, what this FICO score really tried to focus on and evaluate was overall the risk assessment of potential lenders' consumers. Now, they generally kind of looked at payment history as well as accounts owned, credit mix, things like that, all of the separate categories that we've covered in the previous video. Another thing to consider was FICO was also created so that the evaluation for every single consumer was presented fairly. Now, what I mean by this is things like age, ethnicity, gender, name, race, religion, and more won't be factored into your specific credit score. It only looks at the more specific side of things like your payment history, accounts owned, credit mix, length of credit history, and new credit. So believe it or not, FICO is used by 90% of all lenders in today's kind of credit-based world. Now, that other 10% is going to be Vantage-based, but it just goes to show how popular this FICO scoring model is. FICO scores also allow millions of people the access to more financial goals a lot earlier than they would otherwise. Things like houses as well as cars won't have to be paid in cash, and instead you can be evaluated fairly and actually get a lot of these loans a lot earlier than you would, say, 50 or 60 years prior. A good FICO score can also save you thousands of dollars in the long run. Having a worse credit score compared to somebody with a great credit score on a longer term loan like a 30-year fixed mortgage, you can see a difference of somewhere between $10,000 to $15,000 sometimes. So what are some of the minimum requirements to get your first FICO score? Well, if you're starting from absolutely zero credit history, you will need at least one line of credit open for at least 6 months. You'll also need at least one item reported on your credit report. Now, once you have both of those things fulfilled, you will get your first FICO score. So in general, a lot of the third-party kind of credit score checking websites do allow access to your FICO score, but you do want to double check before signing up for any of these services and make sure that they give you access to all three of the credit bureau's kind of credit scores, because you will have three separate credit scores. It is a very important aspect because some people will just check their one credit score, say from Experian.com, and say, hey, I have a 750, when in reality their TransUnion credit score or Equifax credit score could be 50 points lower or 50 points higher even. Another thing to consider as well is checking to see that services kind of update time. A lot of these services won't update, immediately, so it is important to realize how long of a delay there is sometimes between your most updated and recent credit score that, say, maybe the lenders are looking at versus what that third-party website may be offering you. So how exactly is the FICO score calculated? Well, like in the previous video, there are going to be those 5 categories I mentioned, but in case you didn't watch it, I will go over them briefly. You have the payment history category, which is worth 35% of your total available credit score. Next, you have your total debt section, which is going to be 30% of your total score. Up next, you have length of credit history listed at 15%, and then your new credit history at 10%, and then your types of credit used being at 10%. So overall, these 5 categories are definitely not weighted equally. So you want to focus more on your payment history at first, especially as you're starting out. This section of your credit report is so important. And in general, the one thing you can do to really kind of bolster this section is just making your payments on time. So FICO also has industry-specific scores for both credit card issuers as well as auto lenders, and the company also makes industry-specific scores for lenders, but the ranges that I will be talking about are going to be their kind of base scoring system. Now, starting at the poor category is going to be from 300 to 579. Next up is fair at 580 to 669, and then you have the good credit score range, which is 670 to 739. Very good is going to be 740 to 799, and finally exceptional, also known as a perfect score range, is 800 to 850. And according to Experian.com, 67% of Americans have a good FICO score or better, while 21% of all Americans have a good score, 25% of Americans have a very good score, and 21% of Americans have a exceptional and or that perfect credit score. So what exactly is a FICO score used for? Well, there is going to be some variations here. There isn't just a one and all be all FICO score. They do have specific scoring iterations. For instance, even though FICO 8 is most commonly used version for, the scoring model, it's not the one you would typically see for, say applying for a mortgage. They are going to use a separate scoring model. And lenders tend to stick with older versions of the scoring when bigger credit lines are kind of at stake here, because they generally put more of an emphasis on specific categories they want to kind of emphasize there. So there is not really one kind of specific FICO scoring model that lenders are going to stick with when it comes to you and your credit score. So it's important, if you're able to stay up to date with how your score ranges across all of the iterations. So each of the 3 major credit bureaus will utilize a separate FICO scoring iteration, where you have Experian that relies heavily on the FICO 2 scoring model, where TransUnion focuses more on FICO 4, and then finally Equifax focuses on FICO 5. So those are the 3 kind of scoring iterations that I would personally focus most on, especially when you're starting out. It is important to note, however, that things like auto lending as well as credit card lenders will generally stick to FICO 8. And then finally, the newest version of FICO 9 came out recently, but isn't going to be used by a lot of lenders today. It generally kind of takes a couple of years before they start to begin to adopt these kind of newer scoring models. So in general, just kind of focus on those 3 that I mentioned at the beginning, that FICO 2, 4, and 5, because those are the 3 major credit bureaus models. And then also, if you're able to, focus on that FICO 8 as well. All right, thank you guys so much for tuning on into this episode of the Credit Academy. If you guys enjoyed the video, be sure to like, comment, and share, as well as subscribe too. It definitely helps us out. And if you're interested in our services here at the Credit Agents, be sure to check that link down in the description box below, where we have a free 15-minute consultation, as well as check out our email newsletter, as well as our free Facebook group, the Credit Score Hackers, where you can post your questions and get them answered. Thank you guys once again so much for joining and tuning on in. My name is Michael, and I hope to see you in the next one.